Morning, Steve Free in Chicago with the morning grain comments. Prices are lower overnight. Yesterday we had a pretty sharp rally, especially in the soybeans, and I think some people were attributing it to the lower than expected crop ratings for both corn, beans, and spring wheat than expected from the USDA. And a couple of funds came in and bought the nearby markets simply because of the drier than normal and warmer than normal 2-week U.S. Midwest forecast. After the dust settled, a lot of people say that the census April stocks numbers, or export numbers, were actually the emphasis on why we had the rally. And the data came out and said that September through April, soybean exports are running 124 million bushels above inspections. Corn, 150 million bushels above inspection. So it puts the USDA in a tough spot tomorrow, although we're only September through April, but that data would suggest they need to raise both U.S. bean and corn export numbers and lower the carryouts. This, along with the lower Brazil crop, we also would expect that they raise corn exports and maybe even ethanol demand because of that, lowering the carryouts, which would make a neutral report, at least in beans and corn friendly. And not expect a lot of changes though in the wheat. We did note that the China PPI data for May was up 9%. It was the biggest increase in 12 years. And so inflation in China may cause a drop in commodity import demand. And so we'll see if that has any impact on what they buy. Again, most people feel from the U.S. next year they'll take 30, maybe 32 million tons of corn versus 23 this year, and 40 to 44 million tons of beans versus 35 this year. We also note that the American model finally came through with accurately predicting that North Dakota was going to get some good rains overnight. Isolated heavy shower activity, but there was some scattered showers. So now that makes things a little bit more confusing that over a 2-day time frame, the American model is actually doing a better than the European and Canadian models is forecasting some of the rainfall. Canadian and European models are still better long term. And as far as the long-term summer weather forecast is, it hasn't changed. There will be a ridge in the western third of the country. If the Pacific sea surface temperatures cool even more, that ridge could develop into the northern plains and could eventually leak into the western corn belt. That hasn't changed. As far as other weather scenarios, we'll be watching this weekend and early next week. Temperatures and winds in a big chunk of the Russian area could be a Choppy. Now late next week, that goes away, but we'll have to see if it continues to come back. So we'll watch export sales tomorrow, we'll watch the USDA tomorrow, we'll watch weather, and try to decide if we're going to go higher in these marketplaces because of weather. As always, these are my thoughts and not those of ADM Investor Services. Have a safe and profitable trading day. Remember, always treat people like you yourself would like to be treated.